Good day, this is Attila Kovács from GTC News Daily Thread with the facts on the January 22nd, 2018. The global financial markets will focus on this week's ECB meeting for further details on when the central bank plans to end its massive economic stimulus program. Staying on the central bank front, pay close attention to a monetary policy decision from the Bank of Japan. Meanwhile, we focus on fourth quarter US growth to see if the world's largest economy is strong enough to withstand multiple rate hikes in 2018. In the UK, we are waiting for British fourth quarter GDP to see if the Bank of England will rise interest rates this year. Global trade is giving us plenty to wait for as US, Canadian and Mexican negotiators will talk in Montreal from Tuesday to update the North American Free Trade Agreement, the NAFTA, if they will. The gaming world is growing high speed and mobile or casual gaming is still taking shape. Zynga has the most exposure to this trend with acceptable levels of risk. It has no long-term debt and it will be able to use its profitability to outrun some of its competitors. Zynga is testing VR, while the technology's AR mode will only be available for Apple's iPhone and iPad. A key vote on a short-term government funding bill failed in the Senate. The vote's failure led on Saturday the federal government into a partial shutdown. With many aspects, the bill did not provide enough certainty to the military either. Some corporate names can be affected by fallout. For example, defense companies like Lockheed Martin, Boeing and Raytheon, they are warning about contract costs and contingency plans amid uncertainty over the military budget. In the meantime, the State Department approved the possible sale of 34 Lockheed Martin's F-35 jets for $6.53 billion to Belgium, a potential new customer for the company's key product. An amazing week on earnings front. We got over 300 companies to report, including Netflix, Verizon or Intel and many more. Check on GTC News and follow us as we are going to give you preliminary and post-guidance details. This is the single most expected earnings season for years. Take care of your capitals. Oil prices are slowly climbing, pushed higher by Saudi Arabia's announcement that cooperation between oil producers who are currently withholding supplies in an effort to prop up the market will continue beyond 2018. The recent drops in US drilling activity and other reasons, we are not talking politics here, which also support the crude's gain. The American FedEx can now store and declare for inspections of fresh products which previously had to be outsourced. Many quarantine bureaus will take advantage of the new technology, which includes artificial intelligence to achieve paperless declarations for inspections of imported and exported goods. The average time for express items to be released by customs has been shortened to 3 to 4 hours from 2 to 3 work days. Fergo starts marine and land service for Abu Dhabi gas field project. Fergo's ability to provide turnkey service solutions was a key factor in the award of the contract following a highly competitive bidding process. After the company has deployed all necessary equipment for the project, its share price has gained, which still will be able to continue the trend. On the daily peak, we warn you for the wind resorts, which will report before the market opens today, and it could get both ways. Pay close attention, while Nike's got a new price target, which is $74. It could have a short-term gain. The Nvidia aims higher, watch for dips to enter any trades. The Philip Morris finally got upgraded to buy and hold, and the PayPal seems unstoppable. We have a very nice week ahead. Busy week ahead of us, considering that most of major central banks will provide guidances for future rate hikes. The euro-dollar tried to rally, but turned around forming a shooting star, meaning that it could pull back to 120 or 121. In that area, the pair has enough support to find buyers. If we break above Friday's candle, we could head to 1.25. The pound dollar ran into a significant resistance. Most probably it is going to pull back to 1.365 where support is plenty. It is a buy and hold market towards 1.40 or maybe 1.50. The USD JPY had a lot of movement as the dollar fell against the yen, but 110 held it up. The pair currently could bounce around 110 and 113, but if going under 110 support, it could wipe out the long-term gain and drop to 107.5. This was Attila Kovács from GTC News Daily Thread.